Hello students and welcome back. In this video, we will be understanding the various types of companies. To begin with, let us see what is the classification of company on the basis of incorporation. So, all the companies on the basis of incorporation are majorly divided into three categories: statutory companies, registered companies, and unregistered companies. Statutory company is a company which is incorporated under a special act of the parliament or state legislature. These companies are basically public undertakings such as Life Insurance Corporation of India, Indian Railways, and electricity generating companies. The second category is that of registered companies. These are the companies which are registered under the Companies Act 2013 or any other earlier Companies Act. This course mainly deals with registered companies. The third category is unregistered companies. These are the companies which are not registered under the provisions of Companies Act 2013. These companies include partnership firms, cooperation societies, and companies which are incorporated under any act of the Parliament or any other Indian law. Now, I will divide the companies on the basis of other categories, and all these companies which I will be talking about are as per the Companies Act of 2013. So, on the basis of liability, the companies are divided into three types. The first type is companies limited by share. Section 2, subsection 22 of the Companies Act 2013 says that any company in which the liability of its members are limited to the liability of the share they hold is a company limited by share. The liability of the members for this kind of company is limited only to the extent of unpaid value of the shares. Next are companies limited by guarantee. As per section 2, subsection 21, these are those companies where the members have given a guarantee to contribute to the assets of the company in the event of winding up. This means that the members of a company limited by guarantee have actually given a guarantee for undertaking the debt of the company up to a certain amount. The last type is unlimited companies. As per section 2, subsection 92, these are those companies where the liability of the members is unlimited. Such companies may or may not have share capital. The members of these companies are liable up to any unlimited extent to the company and to any person who is associated with the company. The next basis for classification is on the basis of control. Under this, the first type are government companies. According to section 2, subsection 45, a government company is one in which not less than 51% of the paid up share capital is held by the central or state government. They also include companies which are a subsidiary of a government company. Moving further, holding and subsidiary companies are the next category on the basis of control. Let me first tell the meaning exactly as mentioned in the Companies Act. As per section 2, subsection 46 of the Companies Act 2013, the holding company in relation to one or more other companies means a company of which such companies are subsidiary companies, and the expression company includes any body corporate. Now, in simple terms, holding company is one that holds and controls one or more other companies called as subsidiary companies. Now, according to section 2, subsection 87 of the Companies Act 2013, subsidiary company in relation to the holding company means a company in which the holding company controls the composition of the board of directors or controls more than 1/2 of the total voting power, either at its own or together with one or more of its subsidiary companies. In simple terms, a subsidiary company is one which is controlled by a holding company. In short, a holding company is a company that controls one or more other companies known as subsidiaries. A holding company is defined as one that either controls the composition of board of directors of a subsidiary or holds more than 50% of the voting power either directly or through subsidiaries. A subsidiary can also be controlled indirectly through another subsidiary of the holding company. Lastly, I will be telling you about other forms of companies. First, we have Section 8 companies or non-profit oriented companies whose main objective is to promote commerce, arts, science, sports, education, research, charity, religion, social welfare, protection of environment or any other purpose. These companies do not have any profit motive at all. These companies use their profit or any other income for promoting their objectives. Next is a dormant company. According to Section 4, subsection 55, a dormant company is one which is registered under the Companies Act for a particular future project and has not carried out any business or operation or any business transaction during the last 2 financial years. Therefore, the company wouldn't have filed any financial statements or annual returns during the last 2 financial years. Next is a small company. According to Section 2, subsection 85, a small company is a company other than a public company whose paid up share capital does not exceed 4 crore rupees or such higher amount as may be prescribed, but it cannot go more than 10 crore rupees. Also, the turnover of a small company as per profit and loss account for the immediately preceding financial year does not exceed 40 crore rupees or such higher amount as may be prescribed and shall not be more than 100 crore rupees. The next category as per section 2 subsection 62 of Companies Act is OPC or one person company. Here the company will have only one person as its member. The member of a company is a person who is the subscriber to its memorandum of association or its shareholder. So, an OPC will have only one shareholder as its member. In the case of a one-person company, the words one-person company must be placed in brackets below its name, wherever the company's name is printed or engraved. Moving further, we can also divide all the registered companies into two categories, that is, private companies and public companies. According to Section 2, subsection 68, a private company is a company which restricts the right to transfer its shares, has a minimum number of 2 members and a maximum number of 200 members, and has minimum 2 directors. There is no minimum capital requirement for a private company. The words private limited must be added at the end of the name of a private company. According to Section 2, subsection 71, a public company is a company which is not a private company and has a minimum share capital as prescribed and is a subsidiary of a public company. As per Section 3, subsection 1A, a public company has a minimum number of 7 shareholders or members. There is no maximum limit of members for a public company. Shares of a public company are freely transferable. A public company must have at least 3 directors and can have up to 15 directors. If the company wants to appoint more than 15 directors, it can do so by passing a special resolution. So with this, we end this session. Thank you for listening.